Again. Sorry about that. I was muted. It's your girl Kama with CMB Realty Services, and here I am live talking about real estate. And I am really excited about today's topic because we are going to be talking to a lender so we can have a conversation and dialogue about what's happening in the lending business. I am really excited because um I I'm really excited about the whole what's happening right now in the market and what we're doing to educate those that are in the real estate industry, or sorry, not in the industry, those that want to purchase real estate. Sorry, I'm like over here to the left. But I'm really excited about those that are looking to purchase properties because it is so important that you are educated. So we're going to be talking today to a lender just about the real estate market. Again, my name is Kama Burton with CMB Realty Services. And I just want to give you all just a little bit before our lender comes up, just to talk to you all just a little bit about what we're doing, what I'm doing in my office, what I am a part of, and this is our initiative. And our initiative is 150 families and homes by 2025. 150 families in a home by 2025. And I believe it's possible. I absolutely believe it's possible. And I also believe this: for those that want to be educated, for those that really want it, whether you get started now and don't purchase until 24 or into 23 or middle 25, let's get it started. Let's get going. I keep hearing people say things such as, I can't afford to buy a home. Okay, but at what point will you be able to get there? What if we came up with a budget? What if we sat down and talked? What if we had information in regards to how we can help you get your real estate home ownership dreams, how we make them a reality? So that's what we are going to be talking about. I'm just checking on my lender here to make sure we are on one accord. If not, which he should be on shortly, I'm just looking at the information. I do want to talk to you guys about just what's happening on my end as a realtor, as a broker, and what I'm seeing. And we're going to talk about interest rates today. We're going to talk about what the lender sees, because we tend to get a lot of questions. I'm getting questions from people, and you all, please feel free. If you have a question or what have you, please make sure you put it in the chat. The goal, let me make sure my comments are up. The goal is that we're able to help you with whatever questions you may have. And if you feel like you have to send me a private inbox, please do so as well. And I'll make sure to try to get to those questions if you're on Facebook. I can't guarantee it if you're on YouTube, because I don't know if there's a private chat, but if you have any questions, please ask. So let me kind of go back. So the 150, the reason for it is because we're at the point that people really want to have some type of wealth. And one of the easiest ways, maybe not the fastest, but the easiest ways to start building wealth and build generational wealth is definitely through real estate. I want you to think about something. Have you ever had a situation or know of someone who may have had a family member, maybe a mother or a father or grandparent that passed away? They had a home and they ended up, maybe the house ended up going to probate, and you ended up having all these issues and all these problems. Or maybe it was supposed to go to one person, and because of probate, it went somewhere else. Or maybe the person just was not educated on what to do in order for them to ensure that they take that home and pass it down. Or how many people have sold homes because they didn't understand the importance of maybe keeping it for investment, because they were just like, oh, I don't need that. And they look back and say, oh my gosh, I really wish that I would have invested. That's what we're going to be talking about. And these are important conversations to have, because purchasing a home, when you do that, you're able to leave something to your family members, whomever it is. When you put it in the trust, we'll be having someone talk about trust and what's the difference between trust and probate. But if you're able to be set up right, and you're able to take that property and potentially refinance it, pull cash out and go buy another investment property, or maybe buy your first property. Maybe it's a duplex or triplex or fourplex, and you're able to have immediate income because you can live in one and be able to rent the other. I'll tell you, it is going to be great. It is going to be good to know and to understand how to be able to do this, because it'll make you feel better. Education is key. I'm 1 second just making sure that my lender has the link. He's about to come on. His name is Chris Daddario. As soon as he jumps on here, I'm going to pull him up immediately because we're about to dive in. So I want you guys to hold on. But anyway, kind of back to what I was talking about with the generational wealth, as we're talking about how to build it, as we're talking about how to purchase homes, I want you to get ready. I don't want you to say, "Come, I'll be ready in 2 years and I'll call you in 2 years." You don't know what's on your credit now. I don't want you to tell me, that I'm trying to fix my credit on my own. Don't do that. Don't do that. You know why? Because if you have an old collection, this is what I hear from my people. If you have an old collection from 3 years ago, if you have an old collection from your he's trying to find the link, you guys, so I know I'm sounding like, hey, what's going on? If you have an old collection from maybe like 3 years ago or 2 years ago and you pay it, do you know that becomes current? And do you know that when that becomes current, it tends to drop your credit score? Did you know that? Were you aware of that? So that's why I think it's important that you listen to those that are the professionals. Stop doing it on your own. I have people that are working on their credit and it's taking longer for them to work on their credit because of the fact that they're not prepared. Nobody's guiding them on where to go. And yes, you guys, sorry, there we go. All right. He has it. We should be good to go. So these are conversations. And if there's anything you want to hear about, like, I want to hear more about, I don't know, down payment assistance programs. And we are going to talk about that. That's one of the things that the lender and I are going to talk about today is about down payment assistance programs, because there's some pros, there's some cons, there's some do's, there's some don'ts that we need to discuss. So we're going to be talking about that. So if there's something that you need, make sure that you ask. So he's about to come on, you guys, just waiting for him to log in. I'm really excited about this. Again, we are trying to get a CMB Realty Services. We've been around for 2 years. Although I've been licensed as an agent and working as a realtor for 18 years, CMB Realty Services has been around for 2 years, and we are so excited because we have agents that are new, some that are seasoned, some that have been in the industry for many years, just a little bit of everyone. And we are here to make sure that nobody says, as long as they know us, they don't have an excuse of why they didn't buy a home. We're going to make sure that you do that. You're going to have no excuse of why you invest into a property. We're going to make sure that you do that. I am a female, so I'm female owned, Black owned, and I have 14 agents, 1 Hispanic agents, 13 Black agents, and we are here to help also with minority home ownership, because our numbers are super low. So we are here to educate you. So Chris is here. I'm super excited. I'm about to bring Chris up.
Hey, Kama, how's it going?
Good. How's it going?
It's going great. Good to see you.
Good. You too. So here he is, you all. We have Chris here with Express Lending. So I have been knowing Chris for the last couple of years. Actually, one of my clients introduced me over to him. And Chris is my number one. I ain't going to even lie, you guys. I go to Chris for my lending because one thing that I know about him and that I love about him is that he's honest. He's going to tell you if he can do it. He'll let you know if there's something that needs to be done. So we're going to talk to Chris about lending. So Chris, just tell him a little background about who you are, how long you've been doing this, and we'll get started with some of the questions.
Sure. Hey, everybody. My name's Chris Daddario. I've been in mortgage lending primarily as a mortgage loan originator since May of 2003. So I'm coming up on 20 years, which obviously I've seen a lot over the years, and it just doesn't seem like that long ago. But as we all know, time goes by so quickly. In regards to meeting Kama, yeah, we did have a mutual client, which was a blessing, for definitely for me, and I think for Kama and some of her clients as well too. It was just really kind of a happenstance that we met. But I became a part of Express Capital in early 2019. Another broker, really great friend of mine. We both wanted to do this together, so I became a partner of the firm, and it's been great ever since.
Awesome. Awesome. Well, I am so glad, I always tell you this. I'm super glad that we crossed paths because you have been able to help several of my clients, and we're still working with clients to help them make real estate dreams reality. So my first question, which everybody wants to know, is
Right.
What is going on with these interest rates? What are you seeing with interest rates
Yeah.
today, and what have you seen in the last few months?
Sure. Well, the good news for the consumers that are looking to purchase right now is that, so far, and we'll see how it all goes, but so far, the first 3 weeks of 2023 have been favorable. And, we're not on the same kind of escalator up, so to speak, as we were in 2022, where, in 2022 is definitely an anomaly. And it's not something that we see often, but we did see, interest rates the beginning of 2022 start at around 3. And at their peak, they went more than double, all the way up to 7% at one point. Right now, we're in the low sixes, and in some cases on government programs such as FHA or VA, which we do. We do all loans, more or less, I should say. But in particular, you could find rates on those programs, in the fives. So happy about that. We've also been able to see some price reductions too. So, we know that obviously what I do, interest rates are a very important factor of it, but it really is kind of a byproduct, so to speak, too, of the market. And we're going to talk a little bit about that today too. There are a lot of things that, if you do get in at a good price and a higher interest rate, you might even be able to have more favorable terms later down the road. If we do go through something where interest rates go down, you could take advantage of that through a refinance. And a lot of us in this industry really do believe too that if interest rates do go down, well, more than likely that's going to bring in more buyers. So this house that you might be able to get right now, you might not be able to because you have more competition. Where now it's just a really good time in the sense too, where sellers are looking at, first-time home buyers more, even if you need down payment assistance. There's a lot of that out there now where, as Common knows, if you were looking as a first-time home buyer and you needed down payment assistance, it was next to impossible to get your offer even looked at in 2020 and 2021 because you had so many other offers that you're up against that didn't quite have, the same kind of hoops that a buyer might have to go through. Where now, I would say that the advantage is on your side as a buyer now, and you can get much better terms. You don't have to go in necessarily bidding wars than what it was like in 2020 and also 2021.
Yeah, you brought up some good information. So literally a year ago, for those that weren't in the market or didn't really have their ear to the ground about what was going on in real estate, down payment assistance, getting a seller, asking a seller for costs, asking a seller for repairs was almost unheard of for about almost 24 months, or about 24 months or so. Things just really took a turn back in about, I want to say late May, early June, somewhere in there. And we are definitely in a different market. And again, this is why, got to give a shout out to Tori. Hey, Tori, thank you so much for the invite. Tori is one of our agents here at CMB Realty Services. But bringing that up is important because we have a lot of people that right now they are afraid of the market. And I have been telling them like, hey, don't be afraid, because now, although interest rates may be slightly higher, but a little probably about where they were pre-pandemic. And I know that the home prices are higher for sure. I cannot argue that, but ask for cost, meaning ask for the sellers to pay money towards closing costs, or some type of buy down. What are you seeing in applications from other realtors that are out there that you're working with? And then also talk to them about what a seller's 2-1 buy down is.
Absolutely. Yeah, buy downs. I read a statistic that right now in California, that more than 60% of the offers being
Wow.
accepted have some type of seller credit. And when you're buying a house, you can get a credit, but it needs to go towards either closing costs or prepaid. So when we talk about buy downs in particular, there's two different ones. There's what we call a permanent buy down and then a temporary 2-1 buy down. And to start off with a temporary 2-1 buy down, let's just say that the interest rate is 6% flat. If you were to do a 2-1 buy down, the seller would give you a credit to cover the lower interest rate for the first 2 years of the loan. What that would mean is that the very first year, if your interest rate was 6% for year 3 through 30, the first year it would be 4%. And then the second year, that would be 5%. And depending on the purchase price, of course, that's going to lower your payment substantially. It could be anywhere from $400 all the way up to $1,200 to $1,300 monthly on the payment difference from that 2-1 buy down, just depending obviously on what your purchase price and your loan amount size is. So that's become a really popular option where, we didn't hear of these kind of things 2 years ago. So that's one way, one program that's being used to help combat these higher mortgage payments with these higher interest rates. And then the other one, which has also been around, this one's been around forever, is a permanent buy down. That's whenever you hear the term potentially paying points to buy down the interest rate.
Mhm.
Well, that's what that's for. So, maybe instead of a 6% rate, you want to get your payment down $400, but so you really want that 5% down, that 5% interest rate, I should say. That might take 2 points. And, we're seeing it more often than not that the seller would rather give you money to help bring your mortgage payment down and do those type of things than just put, maybe lower the price by 40 or 50 grand.
Mhm.
So those are the two things in particular that we're seeing on more than half of the transactions in California right now.
So you hear it's happening. Now you're not just hearing it from me, you're hearing it from the lender who actually gets the actual purchase agreements. And when they're processing the loan, they're able to apply for that. I have a few escrows going right now, and every single one of my escrows literally have some type of either buy down or closing costs that's being purchased. I'm sorry, that's being paid for by the seller. So it's like super important that you all understand this, because there are still people out there that are saying, I'm waiting for the market to crash. So I don't care about what's happening. I just want the lower home price. Let's discuss that. What are you seeing with this potential market crash that our consumers are seeing, are assuming is going to happen in the market?
We're not seeing it. And the reason is we're not seeing it due to the lack of inventory. When inventory goes up, that's usually the first indication that things are easing. And the reason why a crash is unlikely is that you have people that are selling their houses that if they're selling, unless they're relocating out of state, which you're always going to have those kind of transactions that happen. But what's happening is that you're not seeing the move up sellers right now because some of the people that are locked in at 3%, if they're going to buy another house, they have to really work that into their budget now. Where am I going to buy this new house at a higher price than my current house? But now I'm also going from my rate at 3% to 6%. So that in itself is keeping the inventory low. So, it's boy, I get it. When you're buying your first house, I'm a seasoned veteran. When I bought my first house, just about 3-4 years ago, I was nervous doing it. You're always going to be nervous. It's always going to not feel like, is this the right time? Those are natural questions that every first time home buyer is going to go through. But history has shown that owning real estate, if you can own your house, we talk about this, how it's the best investment you can do, but there's multiple things about it. Building equity, can create wealth in other ways. You could potentially use your equity to buy other properties. Locking in a mortgage payment where if you're renting, as you might be that person that's lucky where you've been at this house renting for 20 years and your landlord has only raised it by $50 or $100 throughout the 20-year period. But it's just not what we see of the norm, where we see people, as we talk about these housing prices that went up, from 2019 to 2022, what else went up? Rent went up. So what did you really gain by doing that? The hard part is that on a mortgage, when you get in, at least you're paying your own mortgage down. And these loans are typically 30-year loans for most first-time home buyers. And what you don't get back is the time that you wait. If that were one thing that I probably could have bought a little bit earlier than I did, but I just didn't have the family yet. I didn't do that and I waited. And that's the one regret that I have personally, is that, you don't get the years back, where the longer you're into a house, the longer you're protected, the more that you got going for you if we could go through inflation like we're all experiencing right now, and the more opportunities you have, quite honestly.
Yeah. And waiting is it just doesn't work, you all. I got off the phone today. I have a lease listing. The lease is at 2,900, and I spoke to a potential tenant, and the tenant told me that she's in the property right now. She was paying 2,500 a month. Now her rent is going up to $3,900 a month. Y'all hear me? $3,900 a month. And I'm like, oh my gosh. And so she said she plans on purchasing within a year. She just has some projects and some things she's working on, but she wants to purchase in a year. She's like, this is just crazy. And so when I hear people paying these numbers, I'm like, why? And we talked about this in the office. Tori, who's on the call or on live, and her mom is Cynthia. We were talking about it and talking about, like, oh my gosh, if people understand the importance of taking that money and putting that money into your own investment, because that's what it is, it makes a huge, huge difference. I mean, we're paying off somebody else's mortgage. If they sell, guess what happens? You don't get a dime from the equity. So as you're sitting there paying their mortgage, you're paying zero to your mortgage, zero to your equity. You're helping someone else pay their mortgage and their equity for year after year after year. And when they're ready to sell, you got to go. They're not going to say, hey, stay. Here's $10,000. I just walked away with 200 grand. They're not going to give you anything but a 60-day notice and say, hey, you need to be out because I have somebody here. And I'm just going to speak reality, because it really hurts me when I hear people say, I don't want to buy. I'm like, why? Why don't you want to invest into yourself? Oh, but I don't have any money. Oh, but and then you regret it years and years and years because you never decide to do it. Trust me, there's something in it. I'm just going to be transparent. Anybody knows me, y'all know I'm going to keep it 100. For those that don't know me, I know Tori invited a lot of her people. For those that are on, because Tori or one of my agents have reached out to you, make sure you reach out to them afterwards. They're giving you this for education. All right. So, Chris, I know we were talking a little bit as well about just like the crystal ball. A lot of people always want to know, hey, what's in the future? What do you see? When is this going to happen for the interest rates to drop? What would you tell them?
Boy, that's a question I probably receive, by at least 2 to 4 times a day, through different clients and or sometimes people in the industry. It's always, what do you think is going to happen with rates? What are they going to do tomorrow? Where the honest truth about this, and I tell people, is that if I knew exactly what rates were going to do, I wouldn't do what I would do. I'd be bidding on the market, because all you have to do is buy treasury bonds, and when they go up or go down, that's what affects interest rates, which a lot of people don't know. When the consumer hears things about where I heard the Fed raised interest rates, they're not necessarily talking about mortgage rates. They're talking about short-term interest rates. And those rates can apply to home equity lines of credit, but they definitely do not apply to fixed rate mortgages. Those are based on the bond market, and that trades daily, just as, it's the same hours as the stock market. The stock symbol is T and X, you can follow it. That's the yield curve on this stuff. So, it just depends on whether there's more people buying or selling that day with what happens on interest rates. There's definitely factors that can cause them to go up or down, but the reality is nobody knows for sure what's going to happen. If I were to pull up rate predictions over the last 5 years, I guarantee you that more than 80% of them would be wrong. And even this year, we've got some outfits such as Fannie and Freddie are saying that interest rates they suspect will be potentially as low as in the 4s. And then we've got other sources out there and financial advisors and big firms like Morgan Stanley and stuff like that saying that interest rates could be 7. So where does it land? You just don't know. And that's why we say, more than anything, if you can get in and you can afford it, if you can, as long as you're long term right now, you're never going to regret buying a house. It's just until we start having more supply than demand, you're just not going to lose on this. So, especially if you're renting. So,
Yeah, there's a saying out here. They say, marry the mortgage. No,
yeah.
marry the house, date the rate.
Date the
Meaning,
rate, buy the house.
yes, hold on to that home. That's fine. But guess what? What can you do? So if somebody, I'll let you answer it. Someone says, you know what, Chris, my rate right now, the rates are too high. They're at 6%. What happens if they drop? What is your answer?
Oh, refinance, especially if you have the equity to do so. It's, if you look at it comparatively speaking right now, the one thing that if you purchase a house right now, and yes, the rate's going to be a little bit higher than what it was 2 years ago, but with all the additional incentives and everything else, the one thing that's nice is that in this kind of market, if rates go down and your property value goes up, you have the opportunity to save more money additionally. Where if you bought a couple of years ago and you got those low rates, hopefully you got yourself in a comfortable position. But now that the rates are higher, you don't have that same type of landscape that you do today, to where you could potentially have some future gains right now. So, and the fact that too, again, you had bidding wars and everything else. So hopefully if you bought your house of your dreams of 2020, 2021, God bless you, you did it, good for you. But the amount of people compared to the people that lost out on things, it was tremendous. And right now, this is the kind of market, it's just like stocks per se, where you kind of, sometimes the people that can do really well are the ones that buy when everybody's selling. Same kind of way sometimes when it comes to these type of opportunities, to where if you can get the house at a cheaper price and then it goes up in value because rates are going low, which is exactly what we saw. That was the reason why housing went up. A big portion of it was because these low interest rates in 2021. The same effect will happen, and then you can be on the right side of that. So, opportunity is there. It's just a lot of it how you're looking at it. And really, I see it a lot with people's credit. What are you spending your monthly money on? What's important to you? We're all, due to this inflation, having to make decisions on what's important. I saw a funny meme, the other day, where the down payment, it showed the person, the buyer, with a carton of eggs.
Yeah.
Where it's like, here's my down payment, I got eggs. Where, as we all know, it's crazy the prices that we're paying for eggs.
Right.
But what can you do potentially to save the money somewhere? How many times you go into Starbucks getting your coffee? What are these things that you're doing? Maybe you just make coffee at home, but anytime you're investing the money in yourself, it's really what can create wealth. I don't know many people that have owned multiple properties that didn't create financial wealth, but I know plenty of people that just rented that, unfortunately, they were never able to get ahead of that rock that was burying them by paying the rent. So, it's just kind of, history has always shown that owning real estate is really just one of the best investments you could ever make. So,
well, there's people out there that need down payment assistance.
Yeah.
And I'm honestly, in the 18 years I've been in real estate, finally, I've come to a conclusion that I'm really going to not just push down payment assistance, but I really want to push, if you have the money, use it for various reasons, depending on what the lender says. What are you seeing with down payment assistance? What is something that you can tell them, maybe some of the cons of down payment assistance in some instances?
Sure. Some of the cons are gross income. A lot of these programs, you have to meet a certain income threshold. And if you're above that, you don't qualify. But on the other side of that, as lending, even with down payment assistance, and sometimes these sound really good, and for the right kind of buyer, it absolutely can be and is a great thing. But a lot of the time too is that, well, you can't make too much to get the down payment assistance, but then you still have to qualify. So then you also have to make this much to qualify. So what we see a lot of the time is that finding the people that fit that space in between, not making too much and not making enough, you got to fit them in there with down payment assistance.
Yes.
So, and then also, the money, it isn't always free. We have the expression, there's no such thing as a free lunch. A lot of the time, the down payment, if it's 3%, a lot of the time they're deferring that loan, and or you might have to make payments on that loan. So it is something that needs to be paid back, and just the liquidity, so to speak, and also potentially with sellers, if you have the money to put down, we have programs that are as little as 3% down without down payment assistance, then get a seller credit, have them help out with your closing costs and go that route, because it's going to kind of open the ratios of what you can do. If you don't, then you got to go down payment assistance. And the great news is that there certainly is help out there, which we do some of that as well too. So.
And don't get me wrong, for those that are watching, I'm not against down payment assistance. I want you all to understand that there's some good, there's some bad, there's some pros, there's some cons, I should say. You got to know that there's grants you don't pay back, but loans you do. There may be a silent second out there, meaning that they'll give you a certain amount of money up front, and when you sell the property, you have to pay that money back, or when you refinance, or when you pay it off. Those type of things happen. You may even have an equity share. There's different types, and we'll talk about that a little bit more in depth on another live. But I wanted just Chris to kind of talk about it. Yes, he does down payment assistance programs, and he also does VA loans. So let's talk a little bit about VA.
As lenders, those are typically our favorite loans to do. Always a great thing, helping out veterans. We can't thank them enough for their service and everything that they do. And with VA financing, the great thing about it is that it's 100%. So you don't need to have a down payment with that. And then there's also not mortgage insurance, where typically if you're doing a conventional or FHA financing, if you borrow more than 80%, you have to have what we call mortgage insurance, which isn't insurance for you. It's insurance that protects the lender in case there was a default on the loan. Great thing about VA loans is that there's no mortgage insurance. That's one of the benefits, what they call the VA entitlement, which it's all kind of built in there, where you as the veteran don't have to pay any of those type of things. So, and also the interest rates are extremely attractive as well too. So, we love VA loans, love helping out veterans. And, definitely if you are a veteran and you don't own a home, I mean, man, what are you waiting for? You don't have to have a down payment. A lot of the time, Comma negotiates really well and hard to get you that seller credit, so you can buy a house with not having to bring anything into closing and stop paying somebody else's rent.
And you know what? I'm glad you brought that up, and we're going to be wrapping up here soon. But I do want you to get a little bit, kind of explain to everyone the difference between we hear closing costs, right? And then we hear down payment. And sometimes people like to marry, not so much, they don't understand that there's a difference between down payment and then your final closing costs, because you have cost and you have down payment. So people say, well, I didn't have to pay a down payment, so why am I bringing in any cost? So if you could just explain that a little bit so people can understand what that looks like.
Yeah, that's a good question. And, that's something whenever we pre-qualify anybody too, we talk about all these things going up front. That's something that we specialize in. Last thing we want is a new home buyer to not be aware of these type of things when we go through the qualification process. But the difference on the down payment is typically, again, your standard loan programs will allow for as little as 3% down. Again, we do have options such as grants or down payment assistance. If you just don't have a down payment, you still want to talk to us. There's a lot that we can still do. We'll always look to do that. But the difference in particular is that the down payment for most programs that don't have down payment assistance and or a grant, they're going to be a minimum of 3% down. So if you're buying a house for $300,000, that means that you would bring in the 3% as a down payment, or you can also receive the funds as a gift. If you had a family member that wanted to help you buy your first home, that's perfectly fine. They just have to be a direct family member, and they can gift you the funds for the down payment. Closing costs, typically when you're buying a house, I should say typically, every transaction I've ever done through my 19, 20 years, you're always going to have title and escrow costs. And, those typically get split up. There are certain things that the sellers pay, but there are certain things that you can pay. Or I should say that you're typically, for the most part, obligated to pay unless you get a credit to offset that. So, that's going to vary depending on the purchase price, but they are two separate things, your down payment and your closing costs. And, again, a lot of times we have solutions too for the closing costs, such as a seller credit, but that is something that you're going to want to know, which we would certainly go over with you. And that's part of the process too of your realtor and me as the lender, where whenever I pre-qualify you, I'm looking at your assets, I'm talking to you, I'm asking you, what are you comfortable putting as a down payment? this is what's the expected cost of this. And then you say, well, I have the down payment, but boy, if we can get some of these costs covered by the seller, I relay that information to Kama. We work together. So when she's writing the offer, she's got all these things in mind too, because essentially, we want the offer and this thing to get accepted for what's going to give you the best type of loan terms, as well as obviously the best kind of price and conditions of buying the house as well.
Absolutely. Absolutely. And that's what we're here for, is to make sure that we work for you. We want to make sure that the information that we work with the lender, of course, with Chris, and Chris will help us guide us on what to do. We wrote an offer yesterday and he told us, make sure that you put $10,000 towards closing for this particular borrower. So our job and our goal here is to help you as a buyer make sure that you get the best that you can price wise for the property. And for those of you, again, that are on, because maybe one of my agents have invited you on, such as Tori, or someone in our office, please make sure you get back with them and they can link you with Chris. I had Chris's information kind of scrolling at the bottom. So if you need to go back and watch the replay, please feel free to do so. Chris, as we end, is there anything that you would like to leave with our watchers, our viewers?
Well, again, I just want to thank Kama for having me on here. And, again, when we talk about the service, it's mutual, the respect that I have for Kama and I believe that she has for me. It's all based on how we treat the clients that we work with. Okay. Because really, I mean, you can Google any kind of realtor, you can Google any kind of lender. Our rates are fairly similar. I do think that we're lower because we have less overhead. I will preach that until the day that I die. I think that's to be true. But really, it's about the service. It's the listening. It's the care. It's like I said, when I bought my first house, being in the industry for 15 years, buying my first house, I was nervous doing it. So you got to handle that with care. You got to handle the expectations, and, sometimes you hear these commercials about lending, or like, I don't want to names in particular, but spaceships, you might have seen the advertisement on there about a spaceship on there about, do this to get this mortgage. We're certainly quick. And you just type your information and boom, you get your mortgage. It does not work like that. There's a lot of things that go into the qualifying and a lot of things that get looked at up front. And the better that, if you're talking to a lender that has experience, that's asking the right questions, that's, fulfilling what your needs are, looking through all the paperwork, making sure things qualify up front, Kama's seen it, we've all seen it before, where the more work that is done up front, the better experience it can be, because it's one of these things that when you're in escrow, it's going to be a little stressful at times. We try to alleviate the best that we can, but at the end of the day, the biggest compliment I get is that just somebody telling Kama that Chris just did a really good job. He kept me up to date. He let me know what was happening. He anticipated everything and everything went smooth. That's all we can hope for. And, that's why I've working with Kama, she's got all her ducks in a row. Her offers that she writes, that's the one thing that I see on my side. I've had certain agents that will write sloppy offers, and sellers look at the offers and the quality of work you put into it is what you get out of it, whether you're writing an offer or you're doing a loan. And, Kama's one of the best where, agents like working with her, everybody does, just because she's got that about her and she's helping building wealth for people, which is a great thing. So.
Well, I appreciate that. Before we go, I do have someone who said, what are the rates currently? And you know what? This is a question I did want to ask because this just came up. Quoting rates, just talk to them just really quick about when you quote a rate, and that whatever today's rate, that does not necessarily mean that that's what you're going to get. There's cost to it based on credit and all that kind of there's different factors.
Yeah, that's the hardest thing, is that the rate and the cost for the rate go hand in hand. And sometimes when you see advertisements, you might see really low interest rates advertised, but what you don't see unless you look at the fine print, there could be a lot of cost to buy that down, which we talked about a little bit earlier in that. Speaking today, as of right now, in conventional loans, interest rates right now, they're right at around 6.125, maybe 6.25, maybe it could go down to 6. And the only reason why I say that is that they do move a little bit daily. So that's the hard part of what we do, is that, like I talked about, interest rates are tied to the bond market, which is up with the stock market, and they can move a little bit. So you want to make sure you're dealing with somebody that's honest too, where if rates go down, they should be giving you the lower rate, things like that too. So that's where they are right now on the conventional side, but the government side, they are a little bit lower. But then the other part to this is that there are things such as credit, loan to value, other aspects that affect the interest rate. So the reality is too, is that the interest rate that you see isn't necessarily the rate that you qualify for. That's dependent on different specifics, like your loan type, potentially how much you're putting down, what your credit scores are. So, you hate to be vague when someone just asks a straightforward question of what my interest rate is, but the reality is that there's a lot that goes into that, where it is going to be different for each individual depending on the program and the credit profile.
Well, I appreciate that, because this is the education that we need. This is what I believe that, the stuff that we know that we need to get out to the consumers. And Zamara she was in my class, and she's I believe she got licensed. It's important that we understand this, because when we're talking to our clients, we want to make sure, like I tell them, I don't quote rates. That's Chris's job, not my job. And then there's different factors. So, people have told me, hey, Kama, I make X amount of dollars a month. This is my credit score. With the rates today, what can I get? Woo, can't do that. We're going to take you to the real estate, the lender professional, the real estate professional, the lender. Well, thank you so much, Chris, for that. And for those that are watching, we really appreciate you sticking on. Next week, live at 5, we are going to have Bonita Grant, who is with Cure My Credit Score. And you can actually go check her out now if you would like to, curemycreditscore.com. She guarantees a 700 credit score. I have been in her program. I actually experienced that, so I know what she's talking about. She is going to give you some tips of what you need to do. So that way, if you do talk to Chris and your numbers are not where it needs to be, and you need to talk to someone about credit restoration, possibly her company can help you. So join us next week again at 5 p.m. We are just talking real estate, educating you on the real estate process. Our mission statement at CMB is empower, inspire, educate. And our vision is to make real estate dreams reality. Thank you all so much for watching. Please stay tuned. Follow CMB at CMB Realty Services on Facebook and on Instagram. And if one of my agents from my office have reached out to you and had you watch this video, please make sure you reach out to them and see what we can do to get home ownership started for you, because it's not impossible. Thank you all for watching, and we'll see you next time.
Thanks, Kala.
You're welcome.